Greetings from Albuquerque, New Mexico, and welcome to 1615's webinar. I'm Tricia Morris, Director of Operations at 1615, and today's webinar is entitled Missionary Financial Support, Following the Rules. The New Testament apostles received and administered money according to Acts 4:34. As stewards of the Lord's resources, we are to joyfully comply with the financial rules and regulations that our government has established for managing missionary financial support. For churches that are handling financial support for its missionaries, this webinar will provide an overview of key IRS requirements and the practical steps that should be taken to comply. We will also look at the missionaries' responsibilities related to tax reporting while serving in the field, and will offer practical guidance for staying out of trouble. Today's subject matter expert is Ron Klipp. Ron is the Executive Director of Shepherd Staff Mission Facilitators. Shepherd Staff facilitates the financial support aspects of global missions for local churches. Shepherd Staff is also an advisor, mentor, equipper to help a church grow as a sending church and steward of their global missions endeavors. So in just a few minutes, I'm going to hand the microphone over to Ron, but first, just a couple of details. You can listen to the webinar through your computer speakers, or you can call in on the telephone. Your phones will be muted to preserve the sound quality of the webinar. As questions come to your mind, go ahead and type them in the question and answer panel located in the GoToWebinar task panel on the upper right-hand side of your screen. We will be addressing questions for the last 15 minutes of our time together. This webinar is being recorded and will also be available for download at 1615.org in the next few weeks. So I'm going to turn it over to Ron, but Ron, real quick, I wanted to ask, we deal as not-for-profit organizations with some real technical issues, and I'm not a CPA, so do you recommend that organizations seek professional counsel or a CPA to help them with some of their technical issues?
Yes, I think that's a good idea. As I go through this webinar, and I think there will probably be a little bit for everyone, it's really designed for organizations and people that maybe have not routinely done this before, and so we're trying to keep it fairly basic. So if there are highly technical questions that folks might have out there, I'd highly recommend that they go through some kind of a professional person to provide the appropriate answer for that.
Great, that's wonderful. Well, you can take over.
Okay, very good. Well, it's great to have everyone listening today, and you know, the last time I checked the list of planned attendees for the webinar, it looked like there was a pretty good mix of churches, a few ministries, and looks like a few missionaries as well. So there's a pretty diverse audience, and hopefully this webinar will address a few things that are pertinent to each of you and your various roles in the Great Commission.
Do you have the controls there, Ron? Here.
It's
there we go.
It's not allowing me to
there you
change
go.
the slide. Here.
Try that, Ron.
Okay, there we go. Excellent. So the purpose of this webinar is to you know, lay out a few basics, a few fundamentals for nonprofit organizations, churches, and other charities on how to handle their missionary support. And as I mentioned, my target audience is mainly those organizations who haven't routinely done this and want to gain a little more understanding. And secondly, I want to provide some information for missionaries and also their home churches relating to their tax responsibilities while serving overseas. And hopefully I'll be able to provide a few additional resources to those who are listening as far as, you know, if there's some things that are of interest to you, you can dig a little deeper on those things. You know, this is such a broad topic. We can only take it so far in covering various details. To cover all the details, it would take a lot of everybody's time, and you all would probably be bored out of your mind. So we don't want that to happen, and so I'll try to point you to some good resources at the end, and also I'll be able to dialogue with you after the webinar. So financial realities. I'm sure everybody listening today would agree that cross-cultural workers, they need money, both for direct ministry purposes and also for their personal expenses while serving in the field. And I'm sure most of you have read in Philippians where Paul states that he's thankful for the church's gift to him, and not only that, he's thankful for the fruit that abounds to their account. So the truth is, though, that usually the last thing a missionary wants to be concerned with while he's serving the Lord in the field is knowing and following rules related to finances. Instead, of course, they want to be involved in their ministry that the Lord's called them to. And often a church or a charity is unaware of a few of the IRS rules that apply to receiving and dispersing missionary funds. So it's sometimes done in the most expedient way by churches, and maybe not the most correct way. So the scenario that I'm going to address today is, I think, the one that's the most common, in that it's a deputized support raising concept. And more churches are desiring to send direct in certain situations. It seems that sometimes for a church, an agency isn't quite the best fit, and sometimes from the agency's perspective, there are certain requirements that missionary candidates don't meet, and so the church may have received a certain vision for missions that they desire to do themselves, and of course, one of the things that enters into it is, how do I handle financial support for my missionaries? And so the deputized support raising concept is most often the one that's used, where the missionary is tasked by the home church to raise the gifts, and the church or the charity determines the amount to be raised, and the missionary doesn't begin the mission until the targeted amount is raised. And in most instances, the missionary plans to serve outside the U.S. for maybe several years, more or less, but usually more than one. And the missionary then would have funds dispersed to him or her directly from the church or the charity. Later on, we're going to touch on a few issues related to handling support for U.S.-based missionaries and support for national workers, and also we'll touch on a little bit about short-term mission trips. But this scenario, the common missionary sending scenario that is here, is the one that we're going to mainly focus on today. So if you're a church, a nonprofit organization that's receiving funds used for missionary support, there's a couple key things that organizations have to be concerned with. The first is ensuring that the financial gift is tax deductible. Secondly, there are issues related to determining an appropriate tax status for a missionary, and there are mainly two choices here. You can treat a missionary as an independent contractor, or you can treat them as an employee. So we'll get into that a little bit later too. So when you receive missionary donations, say you're a nonprofit organization or a church, and you receive donations used for supporting a missionary, the IRS rules say that charitable contributions are tax deductible only if given to and for the use of a qualified organization. So qualified organization meaning the organization has submitted the required paperwork to the IRS, and that's a real chore unto itself to become qualified, and has been approved as a tax-exempt organization under the IRS code. The qualified organization part usually isn't the problem here. It's the to and for the use of part that's mainly the issue when it comes to donations for missionaries, and ensuring that the gifts are tax deductible. And you see here, basically, there are two types of charitable contributions. One are contributions without any donor stipulations. You know, someone is simply making a contribution to the church or to the charitable organization, and there's nothing in the envelope, that no notes, no anything that basically indicates that the donor wants those funds to be used in any particular way. The second is a donor restricted gift, such as those that are designated for a specific individual. And these are the ones that could be problems, in that they're generally not tax deductible. And of course, you know, there's an issue of an organization becoming a conduit to just allow someone to take a tax deduction, a tax write-off on their tax returns, and really, you know, not have it be used for any significant purpose by the organizations that's receiving the funds. So the fundamental question here is, are gifts tax deductible if they're designated or earmarked for missionaries? So let's take a look at this. So to avoid gifts being treated as non-deductible earmarked gifts, contributions to support specific missionaries must qualify as donor preference gifts. And of course, you know, a lot of this is semantics, isn't it? But okay, let's face it. When a donor gives for the support of a certain missionary and specifies that on a note included with the donation or on the memo line of the check, that donor is really expecting the donated funds to go to the missionary. It is, in fact, earmarked for a specific individual, and therefore it looks like it should not be a tax-deductible gift. But the IRS says that the gift can be tax-deductible as long as the donor understands, and again, as long as the donor understands at the time the donation is made, that he or she is making that donation to the church or charity with the preference that the funds would be used for the specified missionary and not for something else. In other words, the donor understands that the church or charity could use those funds in a totally different manner than what the donor might prefer. So it's the church's responsibility, essentially, to make donors aware that the church has full administrating and accounting control, or another way of putting it would be full discretion and control over the funds, and will use those funds as the church basically sees fit. So moving on here, there are two tests to verify full administrative and accounting control. The first test is the intended benefit test, to determine that really the donor's intent is to benefit the church or charity and not the individual. You see, I've put the individual there in red because if there's any intent at the time the donation is made to benefit the individual and steps aren't taken to show that the donation or the donor understands that the church or charity has full administrative and accounting control, then this donation could be non-tax deductible. So the point is that the donor should be aware that the church has complete control over the donated funds prior to the donor making the donation. And so a good way of doing that would be to include a note on newsletters, solicitations, donor receipts, etc., wording similar to what you see here. Contributions are solicited with the understanding that, you know, fill in the blank, whoever you are as a sending entity or an entity that's managing missionary support, has complete discretion and control over the use of all donated funds. And what I thought I'd do here is to maybe give you a few examples. And, one of the ways to ensure that charities or churches who are managing missionary support don't get themselves in trouble regarding this issue is to have a good idea in terms of how communication should be generated. And it would be a good idea to have a consistent approach in doing this. So what I've included here is a sample deputized support raising letter. And basically what this letter points out is that when the missionary is trying to raise support from supporters, maybe church members or whoever, they're specifying that their gifts aren't specifically to them, but it's to the ministry. The part that I have underlined there, your liberal gifts to support the ministry of Shepherd staff enables us to serve here in Ukraine. So this letter points out to anyone who would ever take a look at it that the gifts are not being specifically designated. They're being preferenced for supporting a certain individual, but the gifts are for the ministry of Shepherd staff. And then the last paragraph there, it says Shepherd staff is a faith mission organization. As staff members, etc., we must develop financial partnerships. And so again, the focus is on the gift is for the use of the charity and not specifically for the use of the missionary. And here's another form that might be helpful, in that when someone responds to a letter that's requesting support for a certain missionary, it says here, we believe in the work of Shepherd staff, not in the work of John and Mary Doe, and are sending our gift of X number of dollars. So again, the wording here indicates that the donor understands that Shepherd staff would have full administrative and accounting control over the funds and would be able to use them as they see fit. And then lastly, I've included, this is from an ECFA document, but I think it's a good example of a gift acknowledgement receipt. And you can put all the wording that's appropriate on here that would indicate and make the donor aware and everyone aware that the intended purpose of the donation at the time the donation is given. I'm losing control of my screen again.
There you go, Ron. It's back to you. I apologize.
Hey, no problem. There we go. So the wording here, I think, is very good wording, in that right there where it says gift purpose, sort of in the middle of the gift acknowledgement form, it says the gift is preferenced for the work carried out by Bill and Nancy Jones, who are missionaries. And then also there on the receipt where the wording is, it says thank you for your contribution, which is tax deductible to the extent allowed by law. But then it also goes on to say that we recognize, let's see, that Missions International has complete discretion and control over the use of the donated funds. So right there on all the communications that are being used to process the missionary support funds and even to solicit missionary support funds, you have all the appropriate wording that allows you to withstand any of the tests that the IRS might make when it comes to maintaining full administrative and accounting control over the funds. Okay, so that was the first one, the intended benefit test. The second test is a discretion and control test. And in a nutshell, what this test is intended to verify is that the church and charity is not simply receiving and dispersing whatever comes in. And a good way of meeting this test, because, well, let me back up a little bit, because if you're simply paying out whatever comes in, you're really not, as a receiving charity or a receiving church, you're not really exercising any kind of control over it. You're essentially paying out whatever comes in. You know, it doesn't matter what the missionaries' expenses are, how much they need. You know, any kind of, you haven't put in place any kind of a policy that justifies or shows how you handle missionary support. So one of the things that we recommend is that in meeting this test is that churches and sending entities, they develop policy, financial policy, and financial policies really, when it comes to establishing a budgetary process, establishing how you're going to compensate and reimburse any expenses if your missionaries are in an employee-employer relationship, and just basically how you're going to handle finances for the missionary. There should be a general policy developed for all that. And so, you know, sometimes it's difficult for a missionary to establish their budget, and it's kind of hard to hone in on a specific number. But there should be some processes for that. We here at Shepherd Staff, we have some specific forms that we develop that are used to fill in the blanks and to calculate all the things that we know are essential for missionaries to live on the field. And so churches should also have this process in place too, and a means for you know, making it easy for missionaries to submit expense reports and those sorts of things, and also have an annual audit on financial policies as well. And lastly, it's good to make sure that everyone, particularly the missionary, understands the policy prior to departing for the field. So have a policy briefing so that you and the missionary are pretty well clear on how things are going to work, how you're going to handle finances, just generally how you're going to manage financial things when the missionary leaves for the field. So again, this discretion and control test to establish some sort of a process that gets around this whole concept of paying out whatever comes in can best be satisfied by having some good financial policy. And you know, even apart from the financial aspects, it's good for a church to have a written missionary sending policy in general. For example, let me give you an example. You have a person that goes out on a short-term mission trip and comes back and says, the Lord's called me to be a missionary in Kyrgyzstan, and oh, by the way, I'm leaving tomorrow, and you know, can you get behind me and help me to, you know, to do the thing that the Lord's called me to do. So a good missions policy, written missions policy, will allow you to say, hey, you know, before we can send you out, you need to be serving within the church body for a year. You need to have you know, read a few missions books. You need to have been discipled. You need to have you know, gone through some training. All these things. Of course, part of this general broad missions sending policy is the financial aspects of it, which would say before you can be sent out from our church, you must have raised, you know, X percentage of your overall financial support. You know, those include startup costs, in other words, costs to get you overseas, and you need X number of dollars in your furlough account. And so what a written missions policy gives the church is the ability to point a candidate missionary to a process for he or she to get to the field that needs to be followed in order for the church to get behind them. And it gives the church the power to point to the policy when making decisions to say no to a missionary. In other words, the policy says that I can't send you out now, as opposed to no, it keeps it non-personal, I guess is a better way of putting it. So enough said about policy, but I think it's good for a church to have developed a written missions policy, which includes, of course, a financial policy as well. Donations preference for missionaries continued. Other things to consider when developing your financial policy are things like this, and these things happen all the time. How about disposition of funds if the missionary does not actually go to the field? And we've had a few instances here where missionaries have raised a pretty significant amount of funds in their account, and then they don't go to the field. And what do you do if the donors ask for their funds to be returned? Do you have a policy that addresses that? And a missionary family, here's another example. A missionary family completes their mission and returns with significant funds remaining in their account. How do you handle that? Of course, most organizations, sending organizations, allow a missionary, say, a 90-day transition period when they return from the field. Do you want to do that? Do you want to allow missionaries to continue to receive support and continue to have funds dispersed to them after their return to the States? Do you have a policy that allows them to adjust their salary amount when they return to the U.S. so that if there's a bunch of money remaining in their account, are they able to receive that as a helpful stipend, get them reestablished here in the States after serving overseas? And here's another one. Your policy, if over a period, what's your policy if over a period of time your missionary has not received sufficient donor preference funds to meet his or her original budget, resulting in paying out whatever comes in? Let me give you an example. A missionary family sets their budget at, say, $4,000. However, their support that they receive is always less than that amount. So essentially, you're dispersing to them whatever comes in, which of course is a no-no, since it indicates that you're not really maintaining discretion and control. So what's your policy on this? Do you work with the missionaries to lower their salary so that you're paying out a consistent amount each month? Obviously, they're able to live. They haven't come off the field if they're in this situation. So apparently there's a little bit of a float in the amount required and the amount that's coming in. So there might be some flexibility in reaching an agreeable amount that you're able to pay out on a consistent month-to-month basis. One that's not included here is sometimes a missionary wants to transfer their support funds to another ministry to manage. So what is your policy on that? So a lot of talk about policy. The church, a basic point is the church, the charity, or the sending agency's policy should be understood by everyone at the beginning. And the other item that I think needs to be understood is that your policy, and particularly your financial policy, it really can become a living document. Even after 10 years with Shepherd staff, something new always seems to come up, and we're always kind of determining, well, do we need to write this particular situation? And our policy and to respond to it, do we need to include this as an addition to our policy? And so we're continually looking at different situations as they come up to see what kind of policy, if any, we need to develop to make sure our operation is compliant with, the IRS rules, and we have a good standard that everyone understands and can move forward with. Okay, So another issue, major issue for folks who are handling missionary support, churches and other charities. The question is, how should my missionaries be classified? How should they be classified for tax purposes? And there needs to be some sort of tax relationship for dispersing funds to missionaries. And what should that tax relationship be? So maybe many of you have been here before. You're kind of been scratching your heads about whether to classify, how should I classify my missionaries? Should they be employee or independent contractor? And you know, the truth of the matter is there's no clear-cut rules that say that missionaries in particular should be classified a certain way. And it's a determination that's based on really a degree of control and independence, and there's all kinds of factors that are included in some of the IRS's literature. And if you were to go on the IRS.gov website and Google independent contractor versus employee, all kinds of stuff would pop up, and you'd be able to dig into this as much as you'd like to. But you know, the fact of the matter is that some factors might indicate that the missionary is an employee, while other factors indicate that the missionary is an independent contractor. There is no magic or set number of factors that make the worker an employee or an independent contractor, and no one factor really stands alone in making the determination. But I think the key thing is to make sure you understand what the issues are when it comes to determining who an employee or an independent contractor is and the factors that relate to that, and then make sure you document each of the factors used in coming up with your determination and how you're handling it. You know, input received by ECFA, though, was it's best practice to treat missionaries as W-2 employees. Most IRS audits have fallen on the side of workers being employees rather than self-employed. And usually that's what the IRS is looking for. They're not looking for misclassification of employees. They're looking for misclassification of independent contractors. And as a matter of fact, many of the missions organizations have their missionaries in an employee status. Here are a few of the indicators. W-2 employees normally comply with instructions, have a continuous relationship, et cetera, et cetera. You all can read these. And independent contractors, there are a few of the standards or some of the things that are looked at when it comes to determining whether someone should be an independent contractor. And basically, it boils down to degree of control and independence. And there's all kinds of things that apply to this. There are behavioral things, financial things, types of relationships, and all kinds of standards that the IRS has, and you can dig into on their website if you're really interested in finding out more about this topic. It's really kind of a nebulous thing, unfortunately, when it comes to determining what your missionary classification should be. But here's what's, I think, important to know and to understand when it comes to classifying a missionary a particular way. So when you classify a missionary as an employee, here are the church's responsibilities. You see, the church, must complete a whole bunch of forms, that kind of thing. And when a missionary is in an independent status, essentially the only thing the church has to do is issue a form 1099 at the end of the year. So it's much easier for the church to place missionaries in an independent contract status than it is to place them in an employee status. So when you look at the comparison of missionary responsibilities when it comes to being an employee versus an independent contractor, all the missionary has to do when he's in an employee status is basically file an annual personal tax return. He's also needs to submit the proper paperwork when he wants to receive expense reimbursements if he's in an employee status. But essentially, when a missionary is in an independent contractor status, he's got a few more things that he needs to be concerned about. It's much easier for the missionary to be an employee. As an independent contractor, the missionary will need to project his tax liability in advance to figure his quarterly estimated tax payments. And in order to do this, he'd have to sort of project his financial support and his ministry expenses for the year, which, you know, who can project that sometimes? Sometimes it's a roller coaster ride month to month, but he would need to do that to determine the projected net profit. And if after figuring the net profit, the self-employment tax is greater than $1,000, that missionary would be required to pay in quarterly taxes. So in order to really do the things that a missionary is required to do as an independent contractor, the responsibility is shifted onto the missionary to maintain good ministry expense records in order to complete all the necessary paperwork and the Schedule C that go along with the personal tax return at the end of the year. So this basically is a summary of probably of what I just said, but again, independent contractor missionaries, they've got to pay in self-employment tax, which can be difficult for some missionaries. And as I mentioned, the missionary needs to maintain all records and documentation. And missionaries being missionaries, I think I've said this before as well, they're sometimes not inclined to focus on those sorts of things while they're serving in the field. Ministry is the overriding factor to them oftentimes when they're serving. So sometimes it takes the church or the sending entity to ensure that things are accomplished in a proper way. There are some tax benefits for independent contractor missionaries. When they file their tax returns, ministry expenses are not subject to the AGI floor. In other words, if you're a independent contractor and you're serving in the field, you'll by definition be able to take into account all of your ministry expenses, whereby if I'm an employee, I'll only be able to include as a ministry expense a non-compensated, a non-reimbursed ministry expense. In other words, I hadn't been reimbursed for that expense from my church, but I could only take 2% of my AGI floor. In other words, it would have to exceed a certain amount before I would even get any tax benefit from it. And so missionaries in an independent contractor status can also deduct 1/2 of their self-employment tax. And that's a significant benefit for them as well. There's no deduction for employed missionaries when it comes to that. Now, going back to the ministry expense item, when filing tax returns, ministry expenses are not subject to the 2% of AGI floor. In a couple slides, when we get to the foreign earned income exclusion, we'll see that this really isn't a huge benefit because foreign earned income is excluded from being taxed anyway. And Also, if employees are being reimbursed by the church or charity monthly for their ministry expenses, they're essentially being reimbursed for all their ministry expenses as well. So anyway, I just wanted to make sure that we were clear on that point. So missionaries, know your responsibilities. Just because you're overseas, it doesn't relieve you of your responsibilities to comply with the U.S. tax laws. Know what your classification is for tax purposes. Recognize that major administrative and accounting functions are shifted to you when you're in an independent contractor or self-employed status. Okay, foreign earned income. Most missionaries who are serving overseas are able to qualify for the foreign earned income exclusion. And you know, all this information, everything that you'd want to know about being in a foreign country and how that applies to you in terms of U.S. tax law is in publication 54, Tax Guide for U.S. Citizens and Resident Aliens Abroad, and it'll tell you everything you need to know. And for 2014, the maximum foreign earned income exclusion amount was 99.2. I don't know that we've got any missionaries out there that are getting 99.2 in financial support, but if there are, I'm sure there are others that would like to have your donor list. So feel free to, you know, send them here and I can pass them on. Foreign earned income and the exclusion rule is applicable to both employee and independent contractor. And there are a couple key things. You must have foreign earned income. It doesn't matter whether the earned income is paid by a U.S. employer or a foreign employer. And there are a couple different tests that relate to this whole idea or this whole concept of meeting the foreign earned income exclusion rule. You know, I've had questions on this many times from missionaries who think that they have to be paid by a foreign entity to have foreign earned income. That's not true. For example, income you receive, say, for work done in Austria is income from a foreign source, even if the income is paid directly to your bank account in the U.S. and your employer is located in New York City. So it doesn't matter where the funds are coming from. It just matters that they're being paid to you while you're serving in a foreign country.
Wow, real quick, Ron, so you can be a W-2 missionary from a church, and that's still, if you meet those guidelines, are still considered having foreign income.
That's right.
Wow, thank you.
That's correct, yeah. And there are two tests that apply. One is the bona fide residency test, and again, you can dig through the publication 54 and find out all the details, but the bona fide residency test says you must reside in a foreign country for an uninterrupted period that includes an entire tax year. The key here is an entire tax year, January 1st through December 31st in a given year. And then the second way to meet this is through the physical presence test. And to meet the physical presence test, you must be physically present in a foreign country at least 330 days during a 12-month period. The 12-month period can start anytime. It doesn't have to be from January 1st to December 31st. It can be, you know, any 12-month period, overlapping years. And the IRS makes allowance for people who are living overseas to file for an extension on their tax returns in order to meet some of these tests. So if you're a missionary serving overseas and you're a couple months short or you're a month short of meeting the 330-day test, you can automatically get a 2-month extension to meet this. And there are other extensions that are available for which you'd have to submit some forms to get extensions in order to meet the foreign earned income exclusion standard for being able to exclude at least 99,200, as it was in 2014, from your taxable income. And let's see. Social Security totalization agreements. These are something that missionaries serving in the countries that are listed on this slide should be aware of. The U.S. has bilateral Social Security agreements to eliminate dual coverage and dual contribution. So they're designed to be a benefit to missionaries and others who are serving overseas. So missionaries, they need to be aware of what these treaties say, especially if they're serving in the host country for longer than 5 years. And ordinarily, the missionary can continue to pay into the U.S. Social Security system, and by doing this, and when they do this, they should get a certificate of coverage from the Social Security Administration to confirm to the host country that they're paying into the U.S. system as opposed to the host country system. And so it's important, again, that missionaries who are serving in those countries are aware of the treaties. And our policy is that when we have missionaries that are going to be serving in these countries, we ask them to sign a piece of paper signifying that they've actually read the treaties that are related to that. And for those missionaries whose assignments are going to last longer than 5 years, they should make plans in their furlough schedule to return to the U.S. for a period in which they can essentially be viewed as reassigned for a 6-month period and then reassigned back to their country of service in order to restart the clock when it comes to this Social Security totalization agreement thing. And the Social Security website has all the agreements there. If you have missionaries that are serving in these areas, you can access the information on their website pretty easily. So, summary for the church: put systems in place to show full administrative and accounting control. Evaluate carefully as to whether to place your missionaries in an independent contractor or employee status, and develop policies. I guess if we were to boil it all down, a key thing here would be make sure that as a church you have a good policy in place and procedures to review with your missionary prior to departure. And so oftentimes churches are not equipped, or they really don't want to get involved in that sort of a thing. So an important thing to consider is, do you want to do it in-house or do you want to outsource this? And so here's a plug for Shepherd Staff. And we actually facilitate missionary sending for churches, and one of the primary things that we're involved with is managing financial support for missionaries. And so we'd be happy to discuss with you how we might be able to help, or offer to even give you some resources that would assist you in setting up some processes yourself if you desire to do them in-house. But anyway, we are here to help. We want to help facilitate churches to be all the Lord wants them to be when it comes to sending out and taking care of their missionaries. And for the missionary, know your responsibilities prior to going, and get advice from knowledgeable resources. And I want to touch on just a couple things, and we're almost through. I know I'm probably over, but for domestic missionaries, I know some churches, some entities are really primarily involved with domestic missionaries. You have the same issues as with the foreign ones if you're treating them as employees. Plus, you have to be concerned about the state and federal tax withholdings that you don't usually have to be concerned about due to the foreign earned income exclusion that we discussed earlier. Then you have workers' compensation issues that vary from state to state. Obamacare comes into play, the Affordable Care Act issues in terms of the individual mandate and coverage for that, required coverage for your folks who you treat as employees. Independent contractors is probably a different story, but again, it boils down to how you treat your missionaries, how you classify them for tax purposes. National missionaries, I know that some churches Some sending entities really want to support national workers. Our experience at Shepherd Staff is the preferred way that we do this is that we want to serve national workers through our missionaries who are serving on the field. In other words, if our missionary says that, boy, I would like to get support for one of my national workers here on the ground who's really being used by the Lord and is fruitful in ministry, we can provide funds through our missionaries account that would allow those funds to be transferred overseas as a ministry expense to the missionary. That's our preferred way of doing it. In the past, we have gotten into supporting non-U.S. citizens, mainly as missionaries sent out by a church in the States. In other words, they didn't have the ability to be employed in the United States because they were not U.S. citizens and they didn't have a green card, yet we decided to go ahead and support them anyway because, well, for one reason or another. And we determined that the best way to do that was through the foreign grant process. And so we developed a process of how to do that, to try to simplify it and to make sure that it ran smoothly. And if anyone is interested in accessing some of the information that we have concerning foreign grants and how to make them work, I'm happy to share that with you. It's kind of a cumbersome thing no matter how hard you try to simplify it, but we have found that it's the most, I guess, compliant way when it comes to the IRS rules. Short-term mission trips, last thing, gifts are generally tax deductible even if given by a trip participant. Same things apply in terms of making sure that the gifts are preferenced to support the work of an individual trip participant and ensuring that donors are aware that the charity or the church has full administrative and accounting control over the funds. And then there's lastly, when it comes to short-term mission trips, this whole policy of not refunding gifts if the intended participants do not go. It's important to demonstrate that you have control of this and that the trip participants had no input in terms of how you're dealing with those funds, even though you didn't go. So those are other topics that maybe are a little different from the deputization scenario that I presented earlier. Lastly, resources. I think the irs.gov website is excellent. You can put in the search box just about anything you want, and you get a number of things to look at. Some people are more able to dig into those details than others, but I find that there's a lot of information there. ecfa.org is another good website to get information on the things that we discussed today. Books, Charitable Giving Guide for Missionaries and Other Workers is a great book that summarizes a lot of the things that we talked about today. I think it costs $10. You can get it on the ECFA website. I think Amazon.com has it as well. And also the Charitable Giving Guide for Short-Term Mission Trips, same information. Also, lastly, I'm available to help. Would love to do whatever I can to assist the listeners out there if they have any things that they're working on or feel like they need some guidance in. Be happy to help.
Wow, Ron, that was great information. So many important things to know. I would love to be able to share this with every single church that 1615 works with. It's just amazing. I want to get to some of these questions here that we have. People are actually requesting, is it possible to get a copy of your presentation today with the slides that have those great examples and things on it?
Sure, absolutely.
What we can do is you can email me, Tricia Morris at 1615.org, or Ron Clipp. Right there is his email address, ronc@ssmfi.org on your screen, and we will get you a copy of the presentation. That'd be great. I have so many questions also, Ron, but really quick, here's a couple. Can or should a church set up like a specific missions account that people can donate to, where the church still has full control, but does that help at all? So it's not going to like a building fund or children's ministry or something like that if they want it specifically used for missions. Does that cause any problem? Are they allowed to do that?
No, I don't think it causes any problems. The issues that come into play. Well, let me backtrack. The There's no problems when it comes to the tax deductibility of the money that's sent to the church. There's no issue when
Hmm.
it comes to those funds. They're not really being specified for an individual. The thing the church needs to be concerned about are the things after that when it comes to actually dispersing those funds and following the rules that we talked about earlier in terms of having a tax relationship with an individual
Okay.
um, or other as an employee or as an independent contractor. And sometimes churches send money to other sending organizations. And in that case, there's really not an issue associated with that because the church is basically giving for the work of that charity. So it's kind of like a role reversal thing.
Sure, sure. That's great. That's really helpful. Also, someone would like to know, is it, have you found in your experience, can missionaries do those policy and procedures and budgeting themselves, or have you found that it's better for the churches to handle it, or even a third party such as shepherd staff? Where do you find the best um, situation occurring with the missionaries?
Well, if I understand the question, I think there's so much that goes into developing a missions policy for the church. And I think it takes to be really effective to have some level of consultation that takes place. Um, if the if the question is what about establishing specifically a missions budget for a missionary, that that's done, at least our experience has been through contact with other missionaries that have served in an area
Mm,
that is similar to the one that you're looking to develop a budget
I
for.
see.
And, financial policies and those kinds of things, a lot of times it's simply the church's preference and putting it in writing. It's as simple as that. And of course, being attentive to the rules and making sure that you're following all the IRS rules. We do that. And when I say we, I say Shepherd staff does that, and we would be happy to help churches who are interested in developing policy for their churches and how to really handle the details. And we don't charge anything for that.
Wow, that's great.
We just want to bless churches, and we want to help them to get systems in place that allow them to be all the Lord wants them to be in terms of sending churches.
That's great. That's great. Well, we are approaching the end of our time here, Ron. We just thank you so much for coming and being a part of today's webinar. Such an important topic, so many details. Oh, really, a question I had really quick, hopefully that'll be helpful. You said audit. I saw the word audit in your presentation, and audit is such a scary word. Um, you think, am I going to invite someone in for an audit? That's not something usually we want to do. But is it something that's important? Is it helpful? Will we get in trouble? If we bring someone in and they're like, oh, we
No.
found this or that.
Well, actually, when I used that word audit, I really kind of meant it to be an internal audit.
Oh,
I'm
okay.
sure, yeah, some churches they have their own business folks. Some smaller churches don't, but maybe you have some folks within your church body that might be able to take a look at your processes and make sure that they make sense, make sure that um, they're in compliance to the rules. And of course, hopefully when you set them up to be in compliance with the rules, but make sure that everyone's following them. That's the issue. I think sometimes we develop policy, and then it's a big fat policy that we put on a shelf and don't use. So
Sure.
an important aspect of that is making sure the policy, when it's developed, is usable, and that it's audited as such, and people take a look and ensure that we're actually following the processes.
Wonderful. Wonderful. Well, that's really
Mm.
helpful. Um, Anyways, if you have any questions that we weren't able to get to, please email Ron or myself, Tricia Morris, at 1615.org. Real quickly, before we sign off here, I'd like to let you know about the mission table coming up next Tuesday, September 1st. The mission table talks about controversial mission topics. Episode 4, churches no longer need missions agencies. Is that true? Is it not? We have a great um, table discussion, and live webinar that you can be a part of. Also, our next webinar is called Honor Shame Dynamics. It's a free webinar as usual on Wednesday, September 30th from noon to 1. Register on our website. We also have the Church Partner Forum with pioneers. Matthew Ellison, our President and Church Missions Coach, will be at the Church Partner Forum in November 2015. And let's see, what else do we have going here at 1615? There's our contact information. If you would like any information on how we can help your church become unleashed to reach the nations, just give us go to our website there at www.1615.org, or email me, Tricia Morris, or info@1615.org. Ron, thank you so much. This was just a great webinar. We appreciate all the information. You've been such a blessing.
You're quite welcome. God bless everyone.
Great. Thank you. Everyone, signing off. Good day from 1615.